Good morning and welcome to today's edition of the London Session Open. Today is January 14th, 2019. My name is Alejandro Zambrano, Chief Market Strategist with London FX. We're going to take a look at the markets that we should do at this time of the day. And we're just going to begin with taking a look at the euro dollar, which is a position I'm holding. So the euro is bouncing upwards today, which is something I do like to see. The market has been a bit fragile lately, and the euro moved down. But what's interesting is that the move lower in the euro seems to be like a move triggered primarily in the euro pound. That excessive decline we saw here on Friday appears to be triggered on the back of something happening in euro pound, because at the same time other things like the Aussie dollar, as far as I can remember, on Friday, it closed positively, as you can see here. And then look at New Zealand dollar versus the USD, as well, closed very strongly upwards. And most of the signs points towards weaker dollar, really. So this is the Chinese yuan versus the dollar, and it's the currency of the world's biggest economy, PPP based. 15.5% of world GDP or so is from the Chinese economy. And last week saw significant weakness in the dollar versus the Chinese yuan. Maybe now because they have that, it looks at least they're working towards some sort of a trade deal, or it could be, I'm not sure, probably not. It could be maybe that the market now is starting to project that sort of the worst in the economic figures are over. I don't think that's the case though, but it could be. What is interesting for us though is that we have that significant decline here, and there's a high correlation between the Chinese yuan and the euro. So I actually prepared something here just to give you an idea. See if I can show you. It's just a simple Excel, a simple chart made in Excel. So that's just a simple image. Let me just see if I can make sure that you can see everything. So you might remember, some of you members that have been around from 2016, that I used to have the quantitative models. The quantitative models gave me like a rough idea where the euro dollar should be trading at, and a bunch of other currencies, but then start producing them. They're good, but I didn't really necessarily find them necessary for what I was doing. But here it was because I was doing some other work that I did this. But what's interesting is that I can take values out of the dollar's Chinese yuan exchange rate to predict where the euro should be. And right now, if we were solely based on the Chinese yuan, then the euro dollar should be trading at 117.67. In fact, it started to move upwards like this and had that break. And the euro, of course, has been tagging along from January, but it hasn't really seen that excessive rally. Sometimes the euro dollar moves strongly upwards like it did here, and then Chinese yuan remains soft, so that they will converge at one point. That's one way of looking at it. Right now there's a big difference here, about 200 and something pip. So maybe it's not that the euro dollar should be trading exactly at here's the exchange rate. Maybe it's not exactly that it should be trading at 117. Even if it's halfway through, it should be trading closer to 1650 or something like that. So maybe the Chinese yuan needs to move down a bit, and this needs to go up. But the somewhere in the middle here, 116.50 or something like that, would make sense. Now let's see if that works out or not. Again, the market, if it really wants to, it can just trigger a little stop loss. I don't like the fact that the market is so, to some extent, quite deep into the pattern. Now if it trades below the January 9th low, this will be over. As for this in the short term, again, we'll just need to wait and see. There's no point having a strong view here. But what's interesting as well is that this morning, the market at 7 o'clock it did dip below the lows here from Friday, and then quickly surge upwards, which is good and encouraging. I'm also short the dollar versus the Singapore dollar. This is where I have like all the profits, because dollar index is I think it's slightly break even. Euro dollar is at a loss right now because I'm long from 15.12, but this one is in a profit and sort of carries all the other bad positions, or not bad positions, but positions that are not in the money. Now this is the trickiest part, when you got your entry and you're in the money, and then should you book profits or not? Because last Friday, I think, or Thursday, I was up quite a bit to just see that go back to almost break even. It's always difficult, and this is sort of where the challenge kicks in. And I'm just gonna, for now at least, just track this. So stop loss goes up here. There's no real reason for me to do any major changes here, at least not right now. It could be, in worst case, this will just rally upwards and get me out at break even, and then I'll just have a loss in the euro dollar and a loss in the dollar index. Sometimes it's like that, but I don't. That's not obviously my main case. And the way the euro managed to bounce this morning is a little bit of indication that that might not be the case. So I have not gonna do anything here. My stop loss is still above the highs here. I'm probably just gonna. I don't remember exactly where it is. I think it should be a 136, which is where my entry is. If not, I'm just gonna make sure that it is at 136. As for the dollar index, the market, so I'm pretty much short here from this level here. The market was in my nice little profit, and then went back up to almost break even, and then back down again. And now I think it's in a tiny profit. I'm just gonna remain bearish here. There's no reason to make any changes. I'm having a risk of about 1% here, and I'm having about 1.1% risk in, actually slightly lower than 1% here, and about 1.1% risk in the euro. Yeah, so there's no real reason here. Again, we're still dealing with a downtrend at 2 corrective bounce. That's really what's here. Now, as for other stuff, fortunately, there's nothing else that is really extremely interesting. I did see this one, but it's not a typical pattern I trade. But this is the euro yen, and it looks to me that the euro reversed here and should move me down lower. I just need to assess what's going on in the stock markets, because if your stock markets don't roll over, then I think it's going to be a bit difficult to take on this position. What we're dealing with here in the euro yen is that the market was trading sideways in the zero range. We reached this high on January 7th, and now today we sort of slipped below it. So that's that low range breakout where potentially it's possible to short with a stop loss just above last week's high. So you're looking at a risk of about 91 pip. And if we go all the way down to what we spiked down to, at one point that will be a reward ratio of 5.96. If you reach the actual long-term target, then you're looking at an 8-time reward ratio. But if we look at something more reasonable, which is just down here, then you're still looking at a 2.36 times reward ratio. So this is interesting. The only issue though is that it's not extremely interesting. I think the only thing that really sort of grabs my attention that I like a lot, that I wouldn't hesitate to trade, is corn futures, which have right and so left and right hand, left and right shoulders in the head, with this little section here is a inverse head and shoulders with a break here, potentially opening up things. And then from a big perspective, you have left, right shoulder, and the head down here, which again sort of opens up for even further gain. So this I won't hesitate to trade. But something like euro yen, I'm not really that confident in that. Then there's other stuff as well, like Norwegian kroner versus the South African rand, which is head, left, right shoulder. But we're quite far away from market right now, so I'm not sure if there's anything for us to do there. CAD Norwegian kroner is also interesting. This is a nice, beautiful ascending triangle. And the only issue is that we're quite far away from resistance. I mean, we reached these highs in August 2019, and we still have a bit to go. So this is probably gonna kick in, but probably not this week. Um, Here's another one which is a bit different, and it's actually long GBP, New Zealand dollar. I might go ahead with this one, you know, if everybody decides to buy pounds. Most of my ideas have been to sell the pound, because that makes macroeconomic sense given the risks of Brexit. But most of the time, the GBP does not want to trade down. So the charts are telling us something a bit different. We'll see exactly how this plays out, but and if I ever gonna trade this, because it's a very high risk, but I might put on like 1% risk or something like that. What motivates a bullish position here is that you have a head left and a right shoulder with a break here potentially leading up to an 867 pip return. It's way too early, probably not today, most likely tomorrow on the vote, or after that we might potentially see some sort of a move. What could be is some sort of indication that we might have some sort of a delayed Brexit, so they have more time to negotiate, or sort of any signs that they're going for maybe a new referendum or potentially a people's vote. So here you're looking at a risk reward ratio of about 4 times your money if the stop loss goes below today's low, but ideally maybe we just go a little bit higher today, and then in the next few days we break, and then you're looking at a potential reward here of 8.30, potential risk reward of 8.26. So that's something to keep an eye on. Now this is something else, something interesting as well. So I was looking at dollar Hungarian forint, where the Hungarian forint was gaining, and here as well I think I'm finding this really interesting, and it's the actual Euro Hungarian forint. So both dollar Hungarian forint started going lower at some extent, and you had a nice rectangle breakout. Here's your Euro Hungarian forint, which is trading in a descending triangle with a break to 320, most likely opening up for a nice little decline. Here I decided to take the profit target from the base instead of just the midpoint, and here we're looking at 4 times risk reward ratio. Of course, if today's high is the actual if today's high is the stop level, then risk reward is just 5.34, so it's looking decent. There's some other stuff here developing, which again is probably going to take some time, but it's dollar South African rand. You have a funny looking head and shoulders with head here, this section here actually. This is a bit funny actually, because it's a bit weird, but I'm treating this like the left and this like the right shoulder, and this is the head and the break here potentially opening up. It might be a bit of a different interpretation whenever we reach these levels. We traded here on the 24th of December, so we are probably at least a week or two away from triggering this, if it ever triggers. And then this is the Russell 2000. So the Russell 2000 is up at the breakout point. Remember, I wanted to sell here, and I did sell here with a target of 1173. Well, the market declined not by 19%, but definitely by a significant amount. It declined by about 14%. So that's still solid idea. Now, you see here, it looks a little bit like the Euro Yen, where the market sort of started to trade in Euro Yen, the market started to trade sideways for a few days and then breached. Here, potentially, we can do the same whenever that happens and if it happens. Ideally, this would already be very close to breaking lower. That would definitely have encouraged me to take a bearish position in something like the Euro Yen. That definitely would have encouraged me to do that. Just that then I know that stock market is going to follow 1 or 2 days later. Like right now, it could be US Opens, and then they just lift the Russell 2000. Okay, let's see here if well, let's move along. Sorry, with the other markets. Then we're going to try to answer some of your questions. So good morning to you, Maurizio, as well. I can see you in the chat. I will reply to you in a few minutes. Just gonna provide a quick overview of the situation across all the other markets. Okay, so this is the GBP versus the USD, and it's trading above 128.20, which is resistance. It may actually drift upwards to 130, but this market now is stuck in some sort of a wedge potentially. So I think we'll probably do more consolidation and then eventually maybe some sort of a breakout, but not even here we have anything solid to work with. And because of Brexit, it's no point getting involved. All right, here's the dollar versus the Japanese yen. And the market, you know, here, this is a lower low. This is a lower low in relation to that one. So that turns things bearish. The market moved up to the sell zone, but I think this can continue to drift lower. I'm not very confident, but that the euro yen is going lower is a good sign as well, that both of these are actually drifting lowers. Here's the New Zealand dollar versus the USD. So it's going lower today. The short-term trend is bullish above 67.68, which is this level here. And you know, we might just correct lower today and then potentially go upwards over the next few days and maybe hit last week's high. But we're dealing with a big consolidation period here in the New Zealand dollar versus the USD. So I wouldn't trade this. Here's the Australian dollar versus the USD, and it's not like too much different to the NCD USD. Looking at this, it's just a sideways market which had an extremely excessive decline, which quickly bounced back. But now, as most people are getting squeezed out, people don't want to buy here more. Here's the dollar CAD. The dollar CAD, you can see it stopped trending lower to some extent. This is the stabilization phase. If it can create a bit of a nice range here, it could potentially be interesting to look to trend bullish again, in line with the big picture outlook, because the big picture outlook remains bullish. But it might be better to potentially trade something like, I think it was CAD, Norwegian kroner, and other things than trade this one directly. So this is the dollar versus the Swissy, and it's a choppy market without any doubt. So Maurizio is short this, but he's not really that confident. I understand. On the 10th, the market rallied strongly, but the integrity of this downtrend remains in place here. As long as trade below 99.05, this market is bearish. I think as well, Morgan Stanley, they're quite good with their market calls. There's just two big banks that are really good, at least historically, that are really good to follow, and this Morgan Stanley is one. Deutsche Bank is the other one. Everything else is like, you know, hit and miss. There's not really something super constructive. BNP Paribas as well was a bank at one point you could pay attention to, but I think over the last 2-3 years, most of what they're trading just goes bad. Anyway, they're bearish as well. Not that is any comfort, but again, in general, given what's going on in the world, I'm a bit surprised why the euro is not up much higher and why this is not much lower. But here, it's always like this. We just need to sort of stick with the system. That's really it. I tweeted about it yesterday. I read about it before as well. There was a tweet yesterday I put out, and not that I put out, it was just a retweet. I'm just gonna see if I can just log into my Twitter. So apparently researchers at Carnegie Mellon, Stanford, and the University of Iowa conducted an experiment when they compared the investment decisions made by 15 patients with damage to the areas of the brain that controls emotions. But they had intact logic and cognitive functions. So they looked at these 15 people with damage to their emotional part of the brain and compare them with the trading of other non people with no problems with the brain. And the brain damaged investors finished the game, because it was a game, with 13% more money than the control group. Largely, the authors believe is because the people with the brain damage don't experience fear and anxiety. And that is something that is true, because when we're under pressure, and I have the same issues, guys, it doesn't matter, I've done this for quite some time. Of course, I have less issues than I had initially, but when things don't really progress the way we want to, when you have these things, our brain releases cortisol, testosterone, and a bunch of other chemicals into our brain that makes us forget. It makes us forget that there is a tomorrow. It makes us just focus on one or two the traits we have in front of us, and it's easy to forget that, by the end of the year, that's what we have to work with. And in the short term, this is sort of the experience. This is the ride of trading. And I know it's very difficult, and this is probably the most difficult thing, because we're fighting our biology. And people with brain damage do better, psychopaths and people like that as well do better. And again, I struggle with it as well. Like, we just need to remind ourselves, this is our head. This is your head that is playing with you, Marito. This, of course, you could easily be stopped out without any issue, but the idea is trade 100 times and you will make some profit. That's why I trade the ascending triangles, I trade the head and shoulders and all these patterns. And if I trade all of them, and I do that maybe 100 times in a year, by the end of the year I'm gonna have a profit. So we just need to remind ourselves about that. All right, this is gold, and gold is looking interesting. Nice little breakout potentially to 12.9841, can take things upwards. The low of today is down here, so the risk reward ratio here of 2.86 is not really the one. But again, like we said on Friday, maybe a stop below today's London low, European open low could be enough. That could potentially give a risk reward ratio of 2.33. Crude oil is moving down finally, sort of what I was hoping for and expecting, really. Again, it's sort of about those numbers. Like when it goes upwards, you think, oh, it's gonna just rally forever, but obviously it doesn't. At the highs, it's time to sell, because that's what people sold last time. So we can forget about this. Actually, just leave it on that little head and shoulders for the sake of it. But I think maybe this will go down at least to 49.25, if not 48, and then maybe down here do what could be head and shoulders, and then next time potentially down here, but most likely on the break here I'll probably go turn bullish again, and I'm probably just gonna go for some sort of a move like this. So looking really interesting, but we're doing that head and shoulders. I think here most people that have been long are booking profits now. Again, I think eventually, as long as you're below this high, then we're going to trade lower again. As for the S&P, we are having a bit of a pullback here, but if you look at this on a 6 hour, it's a bit of a pullback. It might be your first bearish day on the for quite some time, but we need to take out 25.46. Until that goes, we could probably go upwards. At the same time, let's just wait for this to sort of try sideways for a bit longer, and then one could potentially short here, targeting the low, because it's probably going to go sideways, and then down, up, and then down again. Here's the Nasdaq, and the Nasdaq again, much like the S&P, is in short-term uptrend above 64.52. It might just bounce from here, but my preference is just wait for consolidation and then potentially sell. Russell 2000 again, sort of same similar pattern. We still have that again, that unmet target. So I think it makes sense to sell, but we need to allow this to spend some time, because most likely now, if I put on a bunch of moving averages and things like that, they're probably down here somewhere. So price needs to catch up with those. It's not that the price needs to catch up with the moving average per se, but it just needs to, this still has a bit of bullish momentum, which means that it doesn't make too much sense to actually short sell just here right now. German DAX, I still think, I mean, it moved up. I still could be creating a head and shoulders. So this could be interesting, maybe potentially looking to buy here. Down here somewhere, maybe at 597. There's not too much momentum here to really bother and do anything really. So I wouldn't really do nothing with that market. And I think that's pretty much it. Okay, so we're gonna wrap things up. Guys, have a great day. Maurizio, thanks so much for joining me in the chat today. Anybody else that has any questions during the day, you know my number. It's on the page, on the members page. So if you have any questions, just send them to this number here that ends with 98. Have a great day, guys. Bit choppy the market, without a doubt. Just waiting for anything else. I think corn is probably going to be it. Let's not feel the urge either to sort of jump into something. There's going to be something good, maybe not this week, because it doesn't look that good across the board, any new positions, and that is. But the markets move really quickly, so maybe not this week, but maybe the week after we'll have more setups. As for now, I'm still up with about 5% on the year, so that's a very, very good start. And if I get stopped out and everything, I'll be up with 1.8, which is still a profit at the end of the day. And we still have, what is it, like 50 weeks left before the end of the year. Okay, guys, have a good day, and I'll speak to you guys later today. Thanks.